Hey everybody, this is True Demon, the Devil Stockbroker, bringing an update for BBIG. So we called BBIG out just about on the 11th of January, saying that we were looking for volume to start coming back in, and we weren't expecting it this quickly, but lo and behold, here we are. Suddenly, there's volume coming into the stock. Just after January 12th, we saw the spike in volume that came in early morning of January 12th, and we saw the lift that was occurring. So we started watching this one pretty closely. I'm going to bring up a few indicators so that everybody can see some of what we were paying attention to. So first we got on balance volume, relative strength index, and the MACD. So these are some of the metrics that we were paying attention to. Here at about this time, we saw the MACD had crossed on the signal, and we saw this as a bullish signal. We figured, hey, this is probably a good time for it to start making a move. So we started to put this one on our watch list. If you remember, several months ago, way back in August, we were watching BBIG for a short squeeze, and it looks like BBIG is getting ready to do it again. So the OBV is significant here because the OBV shows that the volume of the stock is very heavy towards the buy side. There's extreme likelihood that algorithms are messing with this stock, that there's institutions that are playing with automated trading, and uh, the purpose of it would be to create an accumulation or build a position for this stock because of some fundamental catalyst, and this seems pretty timely because we're expecting that any day now BBIG is going to announce its dividend for Cryptide, which is their spin-off company centered around NFTs. So although that date is not disclosed yet, it's expected to come very soon, and holders of BBIG stock will be entitled to receive a dividend in the form of shares of Cryptide when it is released. Further to that, BBIG had a short squeeze occur earlier on last year, starting in the end of August and ending halfway through September, and sold off from there. And those of you who have been following for a while likely remember my conversations with Jason Pollan, who was one of the first YouTubers that I noticed were paying really close attention to BBIG's stock. He was a huge supporter of it, and I feel like he certainly deserves a mention here because he was a major investor, and ultimately I think that he was right um, to pay so much attention to it and to give it so much of his time. So currently, BBIG's OBV is doing some serious lift. It is moving with the price, which we like to see. Over the past several months, we've seen BBIG sell off precipitously while the OBV remained flat. So I'll show what that looks like just so that you understand exactly what I mean. You see the movement is really, really extreme. So you can see how extreme the movement is. So when BBIG stock rockets, the OBV lifts. This is just an indication that the volume is heavy towards buying. Whenever there is a close above the open, that volume candle for that day gets added to the OBV and is added to the balance of volume. And then whenever there is a close below, then that volume for that particular time frame or that candle gets subtracted. So what we see here, huge volume candle on the buy side, obviously massive lift from the previous day, and it created this big uptick. And then the volume suddenly dropped off. There's no volume here anymore. What's up with that? Well, even though the price is falling and there's obviously some volatile and significant price action here, the OBV remaining flat is indicative that there's just not much trading going on in terms of the number of shares moving back and forth. And this is due to the bid-ask spread being extremely wide, and because there is not many trades being placed, it's easy for an algorithm to push the price around by attacking the bid and then waiting for somebody to panic sell and then create a limit order that the algorithm will then drive the price to and then immediately open up a buy order and then start scooping up that block of shares that are then put out onto the market for sale. So what that effect does is in effect, what that does is the algorithm can push the price down below somebody's pain threshold. They know what that pain threshold is because they see it on the order books. They shove the price down below that level, then open up a buy order and say, I'll take any share at this price and throw it at me. And the algorithm scoops up those shares at a discount. And then they repeat the process over and over again. They swing the price up and down. They get people interested by lifting the price a little bit, showing a little bit of excitement, and then just waiting for people to start throwing their money back into that stock, and then they rip the price down, pull the rug out, and then wait for those sell orders to come in, and the algorithm scoops them up again. This process repeats itself for a significant period of time before the algorithm decides that its inventory is depleted, either because it's accumulated too large of a short position or because they just don't have or they have depleted their inventory of shares to a degree that they want to restore it. So then they put in massive buy orders and start scooping shares up out of the market in mass. So then we have some major lift, and then they start the process again, start shorting it down, shorting it down, shorting it down. OBV doesn't move the entire time. And then finally, we get lift again. So what happened with BBIG when it finally had this massive lift period? Well, the price went from $2.86 all the way to a high of $11.90 4 trading days later. So we are now experiencing this exact same movement again. This is how I can tell that there's an algorithm playing in this stock. The 3 candles that we see here, we have a massive dynamite candle and a gap up bull hammer. And then let me zoom in so that everybody can see. I'm looking at these 3 little candles right here. We got a big dynamite candle, a little green bull hammer is what we would call this. It's or a morning star candle, some people might call this. Um, it's just a series of bullish candles with a gap down here, but still a closed green on the day. And then finally, that's when the major lift happens. You see that throughout this period, there was a little bump in the OBV. When you compare this, when you actually look at how this appears on that time frame, the movement is actually quite extreme. So if you look at this time frame here, you see that there was a drop in the OBV, but then it started to create this significant incline as the price started moving up. That's because the volume was getting significant. You see these big volume bumps here right around that earnings period. That is an indication that that move is coming. And then all of a sudden, when the price starts going like this, then, well, I mean, the OBV, this is all FOMO, excitement, options interest, gamma squeeze, the whole 9 yards. So we're seeing that exact same period again. But because we are trading at a higher amount of volume and because there is a lot more people's attention on this stock, the movement isn't as extreme. We're getting a lot of shorting back and forth with this, and that's starting to have an effect in that it is slowing down the movement. This is a bit more of a slow climb, but I still feel that an extreme move is about to come because this little hill that we are experiencing here is relative to this spot right here. If we're comparing these, this is about about a 15 to 20% increase in the on balance volume during this time period. Here, this is about the same thing. The on balance volume here was 1.77 billion, and today it's, if it closes green, which it's almost sure to do, is 2.3. We'll say 2.35 by the time we close the day out. So that represents that's a significant amount of volume, more than 25%. So proportionately, this is actually a much larger increase in volume, which means that there's far more buying going on. And thanks to this previous move that we had here, guaranteed there's a lot more eyes on this stock. What's more, we have the MACD, which had a recent crossover on the daily chart. There's an extreme move to the upside, and the RSI currently overbought according to this. But if you notice back here, the RSI spent more than 5 days overbought before it finally calmed down. We've only just started in the overbought phase right here. So could it fall down from here? Yes, it's most likely going to relax at least at some point. We're not sure when it is, but I still have a higher target than this price, certainly. I'm waiting for currently a breakout above $5.50 for there to be the next leg up in this chart. If the analysis that we've done here is correct, then it's possible we may see far more extreme price movement in BBIG yet. What will that look like? Although, please keep in mind that this is not financial advice and we can't know for certain what this stock is going to do. But if we draw a trend line based off of these top wicks here on these candles, and we set our time frame to be very short, we'll say before March, then we could see anywhere from $16 to $24 potentially. It's an extreme move, and it seems like it's in the realm of fantasy, but these stocks have moved these amounts before. BBIG has made these extreme moves before, and it's followed this expanding megaphone pattern several times. The squeezes and the wedges that BBIG has formed have repeated themselves over and over and over again. And it seems that every single time that there's just the right amount of lift where they hit these thresholds here, as soon as these wedges close, there's a massive lift as soon as it breaks out. And we've had our first breakout here. The fact that we're only here in just the beginning of the chart and that the more extreme moves have shown that the stock will lift more than 40, 50, 60% on the more extreme ones is telling. I'm not saying that it's any kind that it's going to be at all certain. There's no way for me to predict any of this stuff, but at least looking at these, I feel confident saying that there's an algorithm that's trading this stock, and I feel that confident in saying that if this algorithm is in control of this stock, then it's going to create the same extreme moves, and it will be true to its pattern and continue to make the same extreme waves and cause the same volatility that we've seen in the past. Moving on over to Ortex, we see the same price action here. I'll go ahead and make some comments here on the short interest. So I'll just sum it up by saying that it's never really been higher, save for this 1 week period at this point where it very rapidly dropped off, consolidated, and then rose again. Now we're currently resting at over 32 million shares on loan against against this stock. Or I should say, this is just what is the reported short interest. The number of actual shares on loan is much higher at 36.5%, or 36.5 million, excuse me. Taking into account that we've had 90% utilization or higher for the past several months, going on well past July of last year. Starting July 30th of last year, we've been bouncing off the top of utilization with only new supply coming into the stock, never covering, only new supply of shares of lendable shares being added to the inventory for shorts to take a borrow against and then short into the market. Ergo, there's only been continuous shorting going on. There has been no signs of covering that we've been able to see. We can also confirm this by taking a look at the average number of loans and seeing, let me go ahead and remove some of this. The average loans continuously rising. We see some short drop offs, but continuous loans just rising nonstop. And it seems as though the loans keep getting bigger and bigger. So even as the loans get smaller, the number of shares are being taken out are larger and larger. And the oldest loans, on average, are 42 days old. We'll say 43. That's pretty close. So if we go back 30 days to December 1st or December 18th, we'll say December 17th, at an average price of, at a high, $2.90. If we want to stretch it back a little bit further to give ourselves a little bit of deviation here, we could say that at the best case scenario, shorts that have gotten in recently, especially since we see this surge, look at the average days on loan rapidly increasing. This would ordinarily be an indication of covering. But they would be covering the most recent loans in order to do it. So whatever loans are still being held during this period must have been much further back. Let's go ahead and set ours at $5.50, we'll say. Because let's give shorts the benefit of the doubt. Let's give them the best case scenario. Best case scenario, $5.50 is about what the earliest shorts are, according to this Ortex data, would be sitting at. I'm setting a wide deviation based on this average, giving myself more than just about 90 days at this point, just under 90 days from the period. So that's twice what the average days on loan would indicate to us. So let's just say that at best, shorts would be in at $5.50. Once we cross that threshold, there's not going to be like, unless the short is from way back up here and they held it all throughout this period and are still holding it and never covered from that period, then that would indicate that the best case scenario for a short would be $5.50 or worse. So most of the shorts that we see that added to their positions just in recent memory added somewhere between $2.60 and $2.40. So best case scenario for the most recent shorts, $2.60. They're already underwater. The ones that have been in it and holding for a long time are about to go underwater. If the price of BBIG crosses over $5.50, there's not going to be a single short in the past 90 days that is green. What this tells us is it's going to put extreme pressure on shorts that are still holding onto their positions to cover, and the cost to borrow still hasn't updated for today. What is likely to occur if we don't see major covering from the last 2 days of trading, which if we see any return shares, keep in mind those were bought to close 2 days prior before they were reported here to Ortex because of the 2 day delay. So unless we see a major drop in the short interest, then shorts as of 2 days ago still were not selling their positions, or at least the net buying and selling was about the same. As we can see from the previous 2 days, there was more borrowing going on. So as the price was lifting past $3, shorts were still piling into their position on January the 12th. We're likely to see some shorts covering soon, I would think, but we've yet to see. It didn't dissuade them before, so who knows? Maybe they'll keep doing the same thing again. But it remains to be seen. On unusual whales, I'm looking at the whale flow for a $100,000 premium over the past several trading weeks, and what we see is that there's a lot. I mean, a lot of. There are a lot of puts that are about to have a really, really bad time. Um, the whales that have been in BBIG making options plays over the past 30 trading days or so have been having an excessively bad time, especially in this past 2 trading weeks. We see all of these puts for $5, $4.50, looks like some $6 puts as well. All of these are currently hemorrhaging money. The ones that are further out expirations for mid-February might be doing a little bit better, but they are still most likely declining in value right now between theta and the rise in price and volatility. What this tells us is that any whales that have put up this position, especially these ones that have more than $500,000 or at least $250,000, are not doing very well with their recent positions. Any whales that bought calls in the past several weeks are doing much better. And we see these massive whale prints here at, let's see, somebody sold $9 puts that are expiring by February 18th for almost $1 million, which is that's a huge amount of premium. If these were to expire in the money, then they would be buying shares at $9 strike against whatever the current trading market price was. So whoever is selling these puts has faith that before February 18th, the price will rise high enough that this will expire out the money and they will keep this $1 million, or they are expecting that the price will rise high enough that they can buy to close these puts and close out those trades for a huge profit and at least keep a significant portion of this premium. But this right here, this is their max profit on that trade. And if they're wrong, their max loss could be in the millions, tens of millions. At the same time, we saw these two go together, so this is likely the same player. They sold $9 puts, bought $9 calls, so we would call this a collar strategy. It's a double leveraged position, or I should say this is a short collar strategy because they're selling puts, buying calls. This is a bullish strategy. They are expecting the price to climb above $9 and keep going by February 18th. So this is an extremely bullish bet. If this does print, then they will not only keep this $1 million or nearly $1 million in premium, this will, by that point, have exceeded well over. I would say that these would probably have risen in value by more than 500% based on the current trading price because these are dirt cheap. They bought these at 64 to 68 cents in the bid-ask spread. Looks like the spot of the trade was 68 cents. So they bought 2,000 contracts, 68 cents for this much premium, so just under $140,000. If this were to expire in the money, even by $1, they would be profiting. They would be pocketing more than 40%. So I would be expecting them to, if they held that to expiration, are betting on an extreme move from BBIG, and possibly this may be somebody who knows something that's expecting the Cryptide announcement. Digging a little bit further into it, we see the price of Vinco Ventures moving extremely high, and simultaneously the volume of calls is just skyrocketing. It's gone completely vertical. The price, as it's lifted, brought a whole bunch of options interest into the market, and the total open interest in the market has risen significantly by at least 10%, but it was already sky high to begin with. And the open interest, ever since the price saw over $10.80, the open interest has been leveling out at about 100 a million, sorry, at roughly a million options currently open in the market. Currently, whales are betting big on every single call between $5 strike and $10 strike. There's huge expectations for this stock to move fast and far. What's more shocking is that almost all of this volume is entirely on the January 21st time frame. So I would be really careful about this one. That's an extreme YOLO bet, but I'm just looking at the options interest on these calls here, just between $5 and $10, more than, geez, this is over 330,000 calls. That's more than a third of the entire float. So this is a significant amount of options interest, and when you combine that with the Ortex data showing that another third of the float is currently shorted, just between $2.40 and where we're currently trading, shorts stand to lose a massive amount of money. Anybody selling calls is up to lose a massive amount of money, and there's about to be a supply crisis in the stock because BBIG is going to be issuing a dividend. There's a massive catalyst here. The volume is ramping up. There's huge expectations for the next several trading weeks, and the price is lifting to react on this this news that hasn't even hit yet. Just wrapping up here, looking at the daily action on BBIG, this is the massive action that we were expecting, and it has already moved the stock by more than 25, even 30% at its high point of $5.45. Huge gap up pre-market today, and it hasn't even approached filling the gap since then. This actually, and I compared the history of this chart, this price action down to the 5-minute candles has been identical to what was shown on August 27th of 2021. The reason why I call that out, I'm confident that an algorithm is trading this stock and they are moving the stock in a way that is predictable. This giant green candle followed by a weight and a red candle halfway down, this exact move happened on August 27th, early in the morning. This waveform, this pattern here, continued all throughout the trading day for the rest of that day until finally in the afternoon session, it ripped. Starting at about 12:30, From that point into close, the price of BBIG continued to climb well past $5.50. It closed, and then the following day gapped up all the way to $9 before it finally relaxed. Keep in mind that August 27th was an options expiration day, so because of that, there was massive buying after hours due to delta hedging, so that's something to keep in mind. Between now and this Friday, there's a lot of time, and there's also a lot of options. I will point this out. SPRT had a similar situation where more than 110% of its tradable float was in the money. Granted, SPRT was a very low float stock with only about 11 million shares traded. BBIG is much more significant with around 95 to 100 million shares available to trade. So there's a lot more stock to go around. However, proportionately, 30% of this stock being locked up in the options market and 30% being held in short positions is a significant amount. And the fact that institutions hold more than 40% of the stock and retail holding another significant portion is significant data that bears keeping in mind. What I suspect may happen is if retail and holders of call options that are currently in the money were to exercise early this week, it would drive the price more than $14 by Friday. And that by itself could be enough momentum to carry this gamma ramp all the way through to completion. If the price were to go far and fast enough to expire above $10 by Friday, then the following move, I can I can really only begin to imagine the kind of ridiculousness that would ensue for the rest of that time. Keep in mind that when you exercise a call option, it requires the holder of that call option to buy stock if they do not hold underlying stock in order to deliver you those shares. So, if those are naked call options, and I strongly suspect they might be because hell, it's 30% of the float. There's although mathematically it's possible, in practice it isn't realistic to expect that every single one of those calls has been hedged for. It's very likely that half of them, or maybe even 30% of those calls, for a total of about 10% of the total float, are naked calls. If all of the in the money calls were exercised, it would force anybody holding a naked position or holding the short side of the naked position to purchase shares out of the market and deliver those automatically. And doing so creates more buying pressure on the stock, therefore potentially lifting it. So, for that reason, I am considering pulling in some capital so that I can exercise my current in the money calls. I have calls between $3 and $4 that are currently in the money, and I'm looking for an opportunity to exercise some additional calls. But at the moment, um, this is just a working theory that I have based on previous squeezes and gamma ramps that have played out through to a full blown gamma squeeze in the past. But that's about all I have for today. Uh, keep watching this $5.50 level. This is where my breakout level is set at. If we can touch this level and keep going, then I'm expecting the gamma ramp to complete. Um, we've got a lot of time between today and Friday, and the fact that BBIG is moving this far, this fast, even on such a red day where the SPY has fallen by more than 1%, is significant to me. So keep an eye out on this one. Don't sleep on BBIG. The next couple of days will be very interesting. Thank you guys so much for watching, and have a hell of a time in the markets.